Good afternoon. Today is Wednesday, December 23rd. December 21st, and the time right now in Singapore is 12:35 in the afternoon. And overnight on Wall Street, we do see a follow-through selling in US equities, but not very much. It was only a minor breach of the Monday's low, but basically the market is getting ready to rebound. Okay. Last night on the Dow Jones, we can see we have a marginal low at 32,581 for the week. And going forward, I think the market is setting the stage for a rebound. Okay. And tomorrow, we do have the UK and the US GDP Q3 revision report, and that could be the one that caused the market to rally. So watch out for a potential rally going into tomorrow's trading. 33,400 to 33,650 is possibly where I think the market will hit some kind of pocket. And if the market can stabilize and lose momentum around the range of prices, I think the market is going to gear for another rundown to take out the 32,581 that we saw yesterday. Okay, so basically I think the market goes up to around this area here with 33,400 33,650. It could possibly meet some kind of resistance, and it is possibly primed for another sell-off to challenge the 31,727, which is the November low. Okay, so if the market closed this month for the month of December below November low, the market is set for basically further losses going into the first month of 2023. Okay, so over in the S&P 500, we do also see a rather significant pullback. The market hit a high of 4,100 last Tuesday. No, the two Tuesday ago. Okay, so we can see that the price has now come off to just under 3,800. So this is quite a big move here, more than 300 points move in the S&P 500. And we also see a marginal low in the S&P 500. Remember yesterday I did mention that I was already short going into the CPI number that caused a spike to 4,100. And that's where I saw, I was actually short going into the number. And at one stage it was looking to take me out on my stop loss, because I put my stop loss just above the September high. Good thing it just kept at 4,100 and started to trace back and eventually broke the support line here. And on yesterday, Tuesday, I actually in the early morning of Tuesday, which is considered as Monday's trading day, at about 1 something in the morning, I know I took profit on my position and I got out at 3,800. So yesterday the lows was at 37.95, so it's marginally lower than Monday's low. So basically the market has actually been building up a base, and there's also the possibility the market is gearing to rally. And like I said, the catalyst could be coming from the Q3 US GDP revision. So we will have to watch that number coming in at 9:30 on tomorrow evening. Okay, so if there's going to be a rebound, I think the market may be likely to gun for 3,912 to 3,950 area. So if the market managed to go into this pocket of prices and I see some loss of momentum in the shorter time frame, I may be more than happy to jump back into re-establish my short position with the idea that the market will take out this 37.95 and then gun for the November low, which is at 37,000. Right, 3,700. Okay, so this 3698 is the November low. Okay, so if this level cannot hold after the after another rally attempt, so I think the market is basically gearing up to take out this low here, which is going to be very crucial, because this is the level of invalidation as far as I'm concerned. So if the market goes down below this 3647, that means the bear market that we have been seeing in the S&P 500 has officially, or has already resumed, in my opinion. So that is setting the stage for further losses going into the first month of January 2023. Okay, over in the Nasdaq, we can see that the very shallow rebound, okay, from 10,440 to 12,166, okay, now is under threat. Okay, the lowest this last night was just under 11,000. So again, this is one of the weakest index among the US equity index. So if the market sticks out this current this level here, let me see where that level is. Give you one more round to see this level. Okay, 10,632. If the market take out 10,632, is all over. Okay, the bear market has already resumed. Now remember, this year the Nasdaq 100 is one of the weakest. It has fallen at the lowest point at 10,440, 36% in 1 year. So this is massive. So if the market cannot hold, and if it's this rebound go up to 11,425 to 11,570 thereabout, if the market goes up into this pocket of prices, fails to continue to edge higher, then I think it is setting the stage for another resumption of the bear trend. First taking out this low at 10,967, which is last night low, and then eventually take out the 10,632. That will, to me, setting the stage for further losses, very steep losses going into 2023, sorry. Okay, over in Asia, we can see that the Hang Seng market did not fall as much, although it has pulled back from a high of just under 20,000. This morning low was 18,885. So it is on the relative basis a very shallow pullback. So if this is the case, and if the near-term support line is not taken out, there is that possibility that it may actually challenge the 20,000 one more time, okay, because the structure does suggest that unlike the US equity index, the Hang Seng index, because of the expected reopening of the border between China and Hong Kong, is giving this stock market here in Hong Kong that little bit of a lift, because if the Chinese consumers cross the border and started to spend big time in Hong Kong, that could boost the Hong Kong economy. So I think this is the one single piece of news that the Hong Kong people are hoping will actually happen. But right now we are also hearing the other flip side of that situation in China, whereby major cities, whereby the virus, okay, is spreading like a wildfire, and that has caused people to voluntarily stay indoor. Okay, there is no mandate to be locked down, but now because the people look at the spread of the virus and they are a little bit nervous, so they rather stay indoor. So if that's the case, even with the reopening of the border, if people are still very skeptical about their health situation, they may not even come, despite the opening of the border. So again, we have to see, okay, but for now it seems to be holding up pretty well. Over in the Shanghai Composite Index, which is a major stock index in China, we can see that the market hit a high of 3,225, broke a support line very similar to what we saw in US equity index, went out to a low this morning at 3,061, and then basically for a time being stabilized at this level. If there's no new low, I think there is a possibility market may actually rebound based on the expectation the US equity market may rebound going into tomorrow's GDP numbers. Okay, and if this is the case, 3,125 to 3,144 or 45 seems to be where I think the resistance may actually be quite evident. So we have to see what reaction we get if the rebound happen, and if the market goes into this bracket of prices, how it will react. Over the Nikkei, we see very sharp losses. The Nikkei has hit a pocket even below before this month. It hit a pocket at a high of 28,500 in November. So this entire month it has been down, and the sell-off has actually accelerated. Now this morning we saw a low of 26,269.8. Basically the market has already hit my target price, so this is definitely a lousy price to go in to sell if you have not already sold. The risk now is to the upside, so I do expect some kind of reaction. Again, the catalyst could be the US possible rebound because of the GDP numbers coming out tomorrow. Okay, so 27,122 to 27,390 is going to be where I am going to look out for. This entire year I have not sold the Nikkei 225, but this could change because the BOJ, which is the Bank of Japan, has actually broadened its interest rates band. Earlier on, I did mention that BOJ unexpectedly yesterday, while the whole world were waiting for them to make a decision on interest rates, they held interest rates unchanged for the entire year at negative 0.1. However, okay, they have actually lifted the cap. Previously, they would have been suppressing the yield curve so that it doesn't rise beyond 0.25. So now they have broadened that band to 0.5. That means to say that central banks are likely to allow rates to rise. That is the case, then of course that is bearish for the Japanese equity markets. Okay, so yes, the dollar pulled back, the yen rebounded, but it is all bad for Japanese equity. So if I get to see a decent rebound into this bracket of prices, I am very willing to take a look and see if I can get any kind of signal to sell. Okay, so if I do, don't be surprised that I'll be holding short position going into 2023 or at the beginning of 2023. So this rebound could take a few days to happen, or it could take within just 24 hours to actually happen. So I would have to place my order there just to anticipate, okay, to sell at 27,122. Okay, now over in dollar, like I mentioned earlier, the dollar actually have a big move yesterday, okay, because that statement by the Bank of Japan saying that they will broaden the interest rate band from 0.25 to 0.5, that is major because they have been keeping a very easy monetary policy for so long, and that, like I said, they have very little appetite for higher interest rate. But right now it seems that the Japanese economy condition is actually deteriorated to a point where they would have to consider the likelihood of having higher interest rate in Japan. Okay, so if there's going to be a rebound, market came very close to my now for this is very interesting. Let me show you the daily time frame. Over the daily time frame, you can see that 139, this level here, let me remove this word here, 130.39, right? It is going to be my level of invalidation. If prices take out this level at 130.39, the entire bull market that we saw from the low of the pandemic back in March of 2020 is considered to be over. You can see these boxes here is where the fight for dominance in the dollar yen has actually occurred, in my opinion, and it has shifted higher and higher. But if the market takes out this 130.39, okay, this is my level of invalidation. If the price go below here, I would have to come around to accept the idea that the bull market in dollar yen is for now over, and the market right now is in a different phase, favoring selling the dollar against the yen. Okay, so this being the case, but from a risk reward perspective, if prices go below 130.39, it's going to be my maximum risk. Any price around current region seems to be suggesting that if I take a buy position, a contrarian view, and put my stop just below 130.39, then my upside potential is all mine. If I still believe the dollar is going to be strengthening against the yen over the longer term, then this is a fantastic place to actually take up a contrarian view. Okay, but again, this is my opinion. I have no position right now. I actually am looking for position to see if I can buy this dollar yen. Okay, then the top side for the time being is that there's going to be a rebound temporary for a very short term. I think the 133.50 to 134.50 levels is going to be the area of potential resistance. So do look up for 133.5 to 134.5, okay, for any kind of resistance. Sterling, on the other hand, remains very resilient, okay, because the dollar has come off against the yen. That means that the dollar has fallen. So for the dollar to fall, the other major currencies are actually going up. So that is actually a counter trend, counterintuitive to selling all the major currencies. Unfortunately, I already short euro versus the dollar, and today I'm looking for a chance to sell the dollar again, the sterling versus the dollar. Let me go back to the 4 hours time frame to give you some perspective here. The market has actually been very resilient went up to a low of 120.85, and then you see the market has stabilized at 122 levels. Okay, so the market goes back to 122, especially 122.66. I've already placed a limit order to sell. Hopefully I can catch this on the way up if there's going to be one more bounce when London opens up in 2 hours time. Okay, so we will have to watch this move. I think there's a possibility because the market took out a major support line here, and in the market rebound, I still think that there's a possibility of a continuation of this move at the bare minimum to 1.19. Okay, so if I manage to sell, this is going to be my target, 1.19. Okay, euro dollar, I've already sold. At least I have one position that has been triggered. So again, very similar to what we saw in sterling versus the dollar. The market has been very resilient, but again, this is a major support line has been taken out. So I see this as an opportunity to sell and putting my stop just above 107.36. Okay, so I have another existing order to sell at 106.60 level. So if market do another bounce, okay, I will add on to my original short, and at the very minimum, I think the market will challenge so far this month's low at 104. Okay, 103.93 is the low so far for this month, and if this level cannot hold, then obviously I think the market will go for 102.22. Okay, I place an order. This is where my profit taking point is at 102.35. Okay, I've already sold. I put my stop just over 107.50, and hoping the market will come back down to this level. So from a risk reward ratio, this is a fantastic trade setup here. I'm actually hoping the market will actually go below 104 to go to 102.35. Okay. Over in the Aussie, the sell-off in the Aussie is a little bit more pronounced compared to the sterling or the euro. So we can see the price has come back down, and it has already taken so far the initial low in December, which was last registered on December the 7th at 0.6669. So it went out to as low as 0.6629 yesterday, and now the market stabilized. There's another possibility if the market actually attempt a rally. I think from this area here, 0.6730 to 0.6760, I think we should see some kind of resistance reappearing here, and my target is here at 0.6585. So from the risk reward ratio, this is definitely not a good currency pair to trade, because if I sell somewhere around this pocket of prices here and I risk all the way to 169, the risk reward is almost equal. Okay, so from this perspective, I am not going to take a position on the Aussie versus the dollar. Okay, on the other hand, dollar versus Canadian last looks like a little bit more attractive to me. This morning, we saw the market pull back to 135.80 from a high of 137.05. And this is between a rising price channel here. So this pocket of prices actually anticipated market to actually hold, and it did. Okay, this pocket of prices is 135.60 to 135.90 levels. The low here is 135.80. So it did go into this bracket of prices, and we can see prices stabilizing. If the market can take out 137 effectively, I think the market is going to go for 138, which is actually my target. Okay, so based on risk reward, if you put your stop just below 135 and then gun for 138 at the current price of 136.20 thereabout, I think it is still reasonable risk reward ratio. At least if there's a 2-to-1 possibility here. Now over in the crude oil itself, crude oil is actually stabilized. Last week we see prices went up to $73.40, and you can see there's this quite significant resistance line here. This morning, last night it took out this point and then pull back and then stays above this level. So for all we know, the market is getting ready to rally. Okay, if there is going to be a rally at the minimum, if this is a three-wave rally equality move, then the market could be targeting anywhere between $81 to $83. Okay, I'm already long crude oil for quite some time. I think my crude oil position, I have been buying near $78 all the way here, and the market went up to $70, you know, so it did not take out my stop, and the market rebound. So now, last week, as the market pulls back to $73, I added another position. So currently I have 3 long position in crude oil, and I'm just hoping market can go up to $83 for me to exit this trade. Okay, if this is the case, this is an equality move. Now the story behind this is, of course, we heard that there is a gathering storm that is going to hit the oil producing state of Texas, and this storm could see a record amount of snowfall, and that could actually dampen the Americans traveling plan for the holidays. So that is one thing. So the other thing, of course, is that the worsening COVID situation in China, although there is no more lockdown, but people has voluntarily decided that they want to stay home because it seems to be spreading like wildfire, and people rather not take the risk to go out into the public, so they are locking themselves voluntarily at home. So that could be dampening the demand for crude oil if that's the case. So again, we have a few factors both in favor of crude oil, and one in definitely not so good for crude oil. But again, we can see technically the market has taken out this resistance line here. So that gave the market a little bit technically a bias to the upside. Okay, so I hope that this thing can actually develop into a move to $83. Now over in gold, we also saw a unexpected sharp move in the gold price to 1,821 last night. And last night, during the first surge, I actually placed a limit order to sell because I was expecting prices to go and test 1,725. But because of the unexpected news from the Bank of Japan to widen the interest rate band, that caused the dollar to come off. And when the dollar come off as sharp as it did, of course, metal prices actually rallied. Okay, so that is the thing. Okay, it was unexpected, but this morning we can see that 1,821 was the high this round, and it seems to be losing some kind of a momentum. We will have to see whether this is the case going forward into the tonight's trading. Okay, so if it does, then I think there's a possibility market may challenge on 1,817 to 1,738. Okay, but I'm looking at 1,725. Okay, I am already short. And let's see. Over in silver, it is a more pronounced move here. This morning, we still see a marginal high at $24.20, almost 30 cents. And there was a reversal pattern, the very, very small one. Okay, this is a reversal pattern, and the market in silver seems to be pulling back down now. And if this is the case, maybe it will also drag gold prices lower. Okay, if that's the case, we may see prices drifting to the lower side of the rising channel here. And if this rising channel cannot hold the price, there is always a possibility market may go down to challenge the December, so far the low at $22.03. Okay, but somewhere between $22 and $22.85, I think the market should stabilize. And if I do see prices coming to this bracket of prices, I may consider doing a long position in silver as well, because the potential for a massive run up in metal prices is definitely more obvious in the silver market compared to the gold market. And beyond that, I may actually go and buy some physical gold, silver coin, because this could be the last round we see this low. Prices are definitely geared for higher prices going into 2023. Okay. Over in Bitcoin, we can see prices are struggling to go higher. We have a bounce from 16,283 to 17,057 this morning, and then it seems to have hit a ceiling and pulling back. So this is basically a rebound within a very, very sharp drop. So top side is actually, to me, very, very limited. At the most, maybe we have another try at 17,400. Is this 400? 17,000. Oh, sorry, this is wrong. This is not 3, this is O. I thought it looks weird. Okay, 17,100 to 17,350. So I think this is the best it could do for this round. So I am actually quite bearish on the entire crypto space here, purely because higher interest rate is so far seems to be telling us is a negative for cryptocurrencies. Ever since the Federal Reserve high interest rate in March this year, crypto prices has been falling and falling and falling. So I come to the conclusion higher interest rate is definitely a negative for cryptocurrency. So until this interest rate hike come to a situation in which the level of, I think for the time being, the downside risk still remains. Okay, in fact, I do have a view that over the medium to long term, we could see Bitcoin go down to 12,000, maybe even 10,000. So we will have to watch this very, very carefully. Okay, over in Ethereum, you can see another bounce from 1,151 to this morning 1,226, and then the market basically could not go into this bracket of prices, which is 1,227 to 1,250. So this $25 range of prices, I think, could be the cap going forward. Okay, again, the market may revisit this level again, 1,151, and maybe even go down to the November low, which is $1,075. Okay, so do watch out for this move. Now, Ripple has no major fundamental input. We are still waiting for some kind of verdict between the SEC and Ripple Lab. Remember, SEC has contested that the token issue in the United States in the early stages of the ICO wave should be considered as a security, which Ripple Lab is contesting that it is not. So this has been for far too long. The market needs some kind of resolution. Are they going to get Ripple Lab for this, or are they going to throw in the towel and notify the charge. Okay, so we will have to watch. In the absence of any kind of verdict, the market is just drifting. Okay, from a low of 33 cents, it moved out to 35 cents, and then there is simply no motivation at all to move the Ripple coin one way or another. Okay, so for Binance Coin, of course, Binance Coin of late, ever since the implosion of FTX, the gun has been focused on Binance because it is now the biggest exchange. And there were some quarters that actually accused Binance has actually deliberately caused the collapse of FTX by selling off their holdings of $2 billion worth of the FTT token, which is the token for FTX. So now it seems that they are gunning for Binance, accusing them of money laundering. So this is having a negative impact on the coin issued by Binance Exchange, which is this coin here called the Binance coin. And of course, prices has gone up to as low as $220 this round, and only managed to rebound up to $253.80 yesterday, but that was all you can do. Top side, again, is quite limited. 257.30 cents to 268.90 cents, and this is all I think the market can do. There's a risk that it can be kept around this area before the market comes back down again. Now, Dogecoins, Dogecoin is a meme coin, so it doesn't have any fundamental. Of course, everything about Dogecoin is linked to Elon Musk, because Elon Musk seems to love this coin in particular. Anything that Elon does, especially after he bought Twitter, the price went up to 11 cents. And Elon recently sent out a poll to ask Twitter follower if he should step down as a CEO, and everybody say yes, you should step down, and the coin actually went down to 7 cents. So this coin is actually have its fortune tied to Elon Musk. Okay, so do watch out for this move here. Now, Cardano has just taken out a new low for the month. This is not a good development. Okay, originally I was thinking maybe the market can actually stabilize. It did not. Okay, so this level of prices now is no longer applicable. I will have to update this as we go along. So definitely this is not a price in which I think the market can. In fact, I don't think I should take out this one. I don't think the market can actually rebound for the time being. Okay. Even if it can, I think we have to make some adjustment here to make this bare minimum price. Okay, not the one that I saw earlier on, maybe to here. Okay, so the price here is 0.262. Let me see. Let me update this. 0.262 to 0.75. This is all you can do for now. Okay, sorry. $275. Okay, so I think in the meantime, the upside potential for this particular coin here, the Cardano, is pretty poor. Okay, because it has just taken out the year low so far. Okay, as we are speaking, Solana has actually done very well in terms of percentage point. Okay, from a low in about $11, it managed to surge to just under $15. Now it's back below $12. So it does looks like it is quite limited in scope as well. So this is all I have for you for the time being, and I wish that you can keep yourself healthy, and I'll see you again tomorrow. And remember, tomorrow we have the release of the UK and the US GDP numbers for the Q3 numbers. This is a revision number, so we will be expecting no major surprise here, unless there's some major revision to the previous expectation. Okay, guys, I shall see you and tomorrow. Bye-bye.